Hi everyone, thank you for tuning in on time. We'll be starting in a couple of minutes, so sit back and relax, and we'll speak to you very soon. A very good evening, everybody. Welcome to the live webinar on investing in Japan, ETFs, and market opportunities explained. I'm Minghui from Phillip Nova, and speaking to us tonight will be Mr. Shoki Oyabu, Vice President of ETF Market Development at the Tokyo Stock Exchange. If you have any questions throughout the webinar, you can send them in via the question box, and we will get to them at the Q&A session towards the end. Right now, before I pass the time to Shoki, I would like to first pass the time to my colleague Billy Dragova, who will be giving us an introduction to Philip Nova. Over to you, Billy.
Thanks, Minghui. Hi, everyone. I'm Billy from Phillip Nova. Thank you for joining us this evening for our webinar. It's been an exciting time for Japan's market. The Nikkei 225 has smashed through to a record high of 43,000, and the topics crossed the 3,000 mark for the first time ever. Amidst our strong corporate earnings, attractive valuation, increased domestic inflows, and renewed investor optimism has put Japan firmly in the global spotlight. Before we dive into today's insight, let me briefly introduce to you who we are as Phillip Nova. Phillip Nova is part of the Phillip Capital Group, and we have been around since the 1983. Starting out as Phillip Futures, one of the founding members of SGX derivative trading. For decades, we are known for our derivative offerings, but in 2022, we rebranded to Phillip Nova after adding stocks and ETF to our lineup, giving our clients a single platform to trade multiple assets. Currently, we offer access to six major equity markets, including Japan, US, Singapore, Malaysia, China, and Hong Kong. And if you are considering trading Japan equities, there's no better time. From tomorrow, 15 August 2025, until the end of the year, 31st December 2025, enjoy a special promotion. Online trades in Japan stocks and ETF are only at 0.08% commission rate with no minimum fee. That means you can start trading at this promotional rate from only one ETF share. Here's the QR code for you to open an account with us. You may scan the QR code right now or take a screenshot and save the link for you to submit your account application after the webinar. We got an exciting session ahead, so without further ado, let's hand it over to Mr. Shoki from Tokyo Stock Exchange. Over to you, Mr. Shoki. Thank you.
Hi everyone, I am Shoki Oyabu from Tokyo Stock Exchange. Thank you so much for joining this webinar. At Tokyo Stock Exchange, I changed the listing rules and regulations for ETFs, and also I promote Tokyo listed ETFs to overseas investors like you guys. So I'm very thrilled for this opportunity, and I'd like to thank Philip Nova for this. So thank you so much, Billy and Minghui. And I'm surprised by the generous offer Billy mentioned in his session. But anyways, in my session, I will spend 20 to 25 minutes talking about Japanese market outlook and how you guys can take part in potential upside of Japanese market by investing in exchange traded fund or ETF. So let's get started. First, I will give you an overview of Japan's stock market. You might think that Japanese market is a small local stock exchange market in Japan, but in fact it is not. Tokyo Stock Exchange market is one of the largest markets in the world, and it's pretty global. More than half of the trading value comes from non-Japanese overseas investors, which shows that not only local Japanese investors but also international investors actively trade Japanese stocks. Now let's take a look at the top 10 largest stocks in the Japanese market. First on the list is Toyota, and the next one, Mitsubishi, is a bank. And the third on the list is Sony, which is known for PlayStation and like media related business. As you might have noticed, Japan's major companies come from a variety of sectors, and I think that's the strength of the Japanese market, as Japanese stock market does not rely too much on a single sector. And as Billy mentioned, the Japanese market these days is quite strong, and it is like breaking record highs like 2 days consecutively. So this chart shows topics or Japan's broad market index. As you can see, it is rising, like it showed a upward trajectory like most of the times from 2014, which is when I joined the TSE. Back then, the topics was around 1,000 point, but now it's more than 3,000 points. And from here, let's explore some reasons behind this strong performance of the Japanese market. First is the earning, the profitability of Japanese company. Japanese listed companies are becoming more and more profitable each year, with aggregate net income profit in fiscal year 2024, which ended in March 2025, reached a record high. So every year, Japanese companies are more profitable, and investors like that. So strong earnings supports the strong performance of the Japanese market. And one key factor that is affecting the Japanese market at this moment is the US and Japan trade agreement. So let me briefly touch on that. In July 2025, last month, the US and Japan agreed to cut tariffs to 15% on key sectors, down from up to 27.5%. And when this news was available, like the Japanese market surged. It has a huge positive impact on Japanese stocks, as a lot of companies rely on export to the US market. So restored export margins are boosting profitability in Japan's key industries, including automakers and manufacturers. And now that we know that it will be 15%, So there's no more uncertainty. Greater policy clarity is reducing trade-related risks, making Japanese stocks more attractive. And one thing I would like you to remember is that Japanese companies are increasingly prioritizing shareholder returns with rising dividends and share buybacks. So Japanese companies gaining more income and then distributing it to the shareholders, which will have a positive impact on share prices. Buybacks or share repurchases means that a listed company buys its own shares so that there will be less shares outstanding for the same size of business, and therefore it typically has a positive impact on the stock price. And this trend of strong shareholder return is expected to continue as the Tokyo Stock Exchange is requesting listed companies to enhance its capital efficiency. So you can expect like stronger shareholder return going forward as well. Lastly, as the Japanese market outlook, let me talk about how the updates on the investor side. New tax-free investment program or NISA launched in 2024 has led to a significant surge in retail investor participation. So NISA was available like for 10 years or something. However, last year, the investment amount that an investor can use for tax benefit trade investment doubled. And that spurred investment from retail investors. And as you can see from this chart, last year, significant amount of money flew to the Japanese stocks and mutual funds through NISA. And that's it for the Japanese market outlook. Japanese companies are having stronger income and it is distributing more than before. And retail investors are more actively participate in the Japanese market. And those things are supporting the Japanese market's strong performance. Now let's move on to today's red meat, ETF or exchange traded fund. ETFs are a fund. So through ETF, you can achieve the return of a fund or a basket of stocks. Let's think about when you invest in a stock. You pick a stock like Toyota, Nintendo, Panasonic, and you send an order, you buy it. You would want to buy multiple stocks so that you can achieve a diversification, and diversification is a key for investment success. On the other hand, if you invest in an ETF, just by investing in a single ETF, you will achieve the same return of a diversified portfolio. It's just one security, but through that, you can get the return in the same way as investing in many different stocks. And now that Phillip Nova is offering a generous promotion for commission, and that does not have a minimum amount, so you can buy just one share of ETF with probably a few dollars, as like cheaper, like small ETF can be purchased with a few dollars, and you can achieve a diversified portfolio's return. And you can trade ETFs in the same way as you can trade stocks. So if it's a not ETF funds, you can only buy or sell once per day, and the purchase price or sales price is not known in advance. So the price might end up being more unfavorable than you have expected. On the other hand, you can trade ETFs in the same way as stocks. So you can set your desired purchase or sell price using limit order. So simply, you can choose when to buy or sell on a real-time basis. And if the market price doesn't meet your expectations, you can simply decide not to do the trade. So this is a benefit of ETFs. And this slide discusses the key advantages of ETFs. ETF is cost efficient. Because of the harsh competition among ETF providers, ETF offers cheap or low management fee that will contribute to your long-term return. So it's cost efficient. And also, now that there's a promotion at Phillip Nova, so if you trade through Phillip Nova, it is even more cost efficient. And as I explained, ETF is a basket. So you can, just by investing in ETF, you can get a diversification benefit. And Tokyo market has like globally well-known market makers that provide bid and offer quotes continuously. So you can execute your trade like instantly. And this is the overview of Tokyo Stock Exchange's ETF market. Actually, the TSE's ETF market is the largest in APAC, and it's growing. This is because overseas investors, international investors, are investing in TSE-listed ETFs more than ever before. The ETFs held by overseas investors tripled in the past 5 years. Okay, from here I will introduce specific ETFs that you might want to consider investing. First, I will introduce broad market ETFs, the most basic ones, and then I will move on to sector or thematic ETFs for Japanese equity. And I will move on to introduce REIT or real estate investment trust ETFs. And lastly, I will briefly touch on leveraged and inversed ETFs. So firstly, I would like to introduce TOPIX and Nikkei 225 index ETFs. Those two indices are like widely used in the Japanese market. And the two indexes are different in design, but as you can see on this chart, in the long run, the performance is quite similar. In this chart, I also added MSCI Japan and FTSE Japan, which are sometimes used by international institutions. But as you can see, the performance is similar in the long run. TOPIX is market cap weighted index covering 1,600 stocks listed on TSE Prime segment. So just by investing in one TOPIX ETF, you'll get the same return as a basket of 1,600 stocks. On the other hand, Nikkei 225 is price-weighted index covering top 225 stocks across sectors. It is often said that TOPIX performs better in a weaker market, and Nikkei 225 performs stronger in bull market. That's why from 2020 to 2021, you can see the outperformance of Nikkei 225, but in the long run, it's quite similar. And these are the examples of ETFs that you can trade through Phillip Nova. And we have TOPIX ETF and Nikkei 225 ETFs, and for comparison, I added ETFs listed on the US market. The largest ETF in the Tokyo Stock Exchange market is Nomura NF or Next Fund TOPIX ETF, ticker 1306. It has the largest AUM in Tokyo, and it is the largest Japanese equity ETF globally. Excuse me. Sorry. And what's notable is the low total expense. So it's cheaper in the Japanese market because Japan is the home market to Japanese equities. So in the long run, this difference in total expense can make a difference. So if you want to invest in Japanese ETFs, I would highly recommend to invest in like Japan listed topics or Nikkei 225 ETFs for lower expense ratio. And topics on Nikkei 225 are the ETFs that you might want to consider invest first if you think about investing in Japanese equities because it is the cheapest, largest, and most liquid. Next, I will move on to sector ETFs. So we have 17 sector ETFs available through Phillip Nova. And actually, the sector performance can differ significantly, as you can see on this table. Last year, Banks ETF had the most strong performance, which was up 61.2% annually. On the other hand, transportation and logistics showed a slight loss last year. So if you can pick a right sector and add it to your topics or Nikkei 225 ETFs holdings, you can outperform the market. So adding a sector that you think will perform better and add it to topics on Nikkei 225 is a popular way to leverage sector ETFs. And this chart shows the performance of 17 sector ETFs in the first half of 2025. So real estate had the best performance due to the strong real estate market. On the other hand, persistent weaker Japanese yen lowered the performance of foods industry because we rely heavily on import for food. And another type of ETF I would like to recommend is high dividend yield ETFs. These ETFs typically offer dividend yield higher by 1 to 2% than topics. And this is a boom. This is very popular among Japanese institutions and also retail investors. The total AUM or asset under management for high dividend ETFs have tripled in the past 2 years, showing significant interest from investors. And this table shows major high dividend Japanese equity ETFs, and the top on this list, Next Fund's Nikkei 225 High Dividend, ticker 1489, is the largest, and also it is one of the most popular ETF among retail investors other than topics or Nikkei 225. And high dividend stocks tend to perform stronger in a weak market. So adding a high dividend yield ETF can improve or enhance the portfolio's dividend yield and also could give some protection in the market downturn. Another theme that is popular is semiconductor ETFs. 2644 Global X Japan Semiconductor ETF is popular among local investors and also overseas investors. April this year, the market experienced a dip globally, and after that, semiconductor ETFs is rebounding more strongly than the overall market. And by investing in Japanese semiconductor ETFs, you can invest stocks like Renesas Electronics, Disco, Tokyo Electrons, like flagship semiconductor stocks in Japanese market. In addition to high dividend and semiconductor, we have more than 50 thematic ETFs tailored to diverse investment themes and strategies. So adding thematic ETFs that align with your investment idea could be an interesting investment strategy. For example, now that people are on vacation and I see a lot of foreign tourists everywhere, and that could lead to an investment to leisure and entertainment ETF 2645. And through this ETF, you can invest in Oriental Land, which is the operator of Tokyo Disney Resort, and Sanrio, which is known for Hello Kitty, and ANA Holdings, which is a major airline in Japan. So I think it will be interesting for you to explore the offerings of Phillip Nova to see what kind of thematic ETFs are available in the Japanese market. And top performing thematic ETF last year was the Global X Japan Games and Animation ETF, ticker 2640. As you can see on this chart, the performance was significantly stronger than topics. And even in 2025, this ETF's performance is stronger than the overall market. It is interesting that animation and games are what Japan is known for, right? And that thematic ETF is performing the best last year. Through this ETF, you can invest in Nexon, Capcom, Konami, Nintendo, or those companies that have games and animation businesses. So it might be interesting for you to consider adding this thematic ETF to your Japanese equity portfolio. I'll move on to talk about real estate investment trust, or REIT. Japanese REIT market is the second largest in the world, with 57 REIT issues, and we welcomed one new REIT listing very recently. And what's notable about Japanese REIT is a high dividend yield. As of May 2025, the forecasted dividend yield was 5%. I think which is very competitive, and there's no need to compare and do a research for 57 REIT issues available in the Japanese market. You can just invest in TSE REIT Index ETF, and through that, you can invest in all 57 TSE listed ETFs. And TSE REIT Index is performing very strong recently. From previous year to the end of July, it was up about 12%. So the REIT market is very strong with a high dividend yield. And the largest REIT index ETF is 1343 Next Funds REIT Index. And the Japanese REIT Index ETF that offers the lowest management fee is 1597 MUAM J-REIT ETF. Last but not least, the most popular ETFs for Japanese retail investors is actually leveraged and inversed ETFs. Those ETFs are traded very actively, very liquid, so you can crystallize from the short-term market fluctuation using leveraged and inversed ETFs. I would not recommend you to hold this ETF for long term. However, if you are interested in take part in the short-term market fluctuation, these ETFs are worth considering investing in. So that's it from me. I thank you. Thanks again for joining this webinar, and I hope you consider trying some ETFs in the Japanese market.
All right, thanks, Shoki. We can go into our Q&A section right now, and we do have a couple of questions that I can see. All right, first question. We have a question asking, why do we see a stronger performance of the banking sector relative to other sectors? as you have shared earlier?
That's a wonderful question. So, as you might know, that in Japan, the interest rate was virtually 0% for many years. And last year, the Bank of Japan decided to increase the interest rate, policy rate. And banks make money by lending money, so the higher interest rate will benefit banks' business. And that's why banking sectors performed the strongest last year. And people are expecting that the BOJ or Bank of Japan will raise the interest rate again this year or next year. So bank sector is was the hit last year, and also a lot of investors are like interested in bank ETF at this moment as well.
Got it. Thank you. The next question is, do Singapore investors have to pay tax from the Japanese ETF dividends and distributions?
That's a wonderful question. So I believe that there is a withholding tax on dividends in Japan, but there could be like a way to avoid some part of dual taxation. Are you familiar with this, Billy or Minhui?
Billy, will you be able to take this question?
Regarding like how investors might be able to reduce, I'm not too sure. So that is something that we have to confirm again. So feel free to write in to us and we can get back to you on this. Thank you.
Okay, thanks, Billy and Shoki. We have one question next. Someone's asking whether the Bank of Japan is still buying ETFs, and if not, is the Bank of Japan holding or selling off their holdings?
Oh, that's a very interesting question. So the Bank of Japan stopped purchasing ETFs. I think it was in 2023. But since then, the Japanese market, ETF market grew as like players other than the BOJ are investing more actively in the Japanese ETF market. And probably the Bank of Japan will have to sell the ETFs that it has in the long run. It cannot have it forever on the balance sheet, I guess. However, it will be very slow. The Bank of Japan actually purchased like stocks, Japanese companies' stocks in the past, and it completed the sales of those stocks recently, but it took very long to sell the stocks that the BOJ had. So the Bank of Japan will, like in the long run, it will sell the ETF holdings, but it will be very slow, and the BOJ will pay attention not to disturb the market when they sell it.
All right, thank you very much, Shoki. And I still see some questions on the text. We will get back to everyone on this after we've had a check. We will get back to you via email, the follow-up email that we'll be sending to everyone after the session. And we have no other questions already. So I will pass the time back to Billy so he can share about our promo again. Thank you again, Shoki. Sorry, just give us a few more moments.
Yes, it's all good now. Thanks Minghui, thanks Shoki. And yeah, just to reiterate the promotion again, starting from tomorrow, 15 August 2025 till the end of the year, we are actually running a very attractive promotional campaign on our Japan stocks and ETF at only 0.08%. You can trade Japan stocks and ETF with no minimum fee. So as Shoki said, you can start trading from even just one share of ETF. And yes, I just want to leave this screen here for a moment so that you can actually like take the action now and start your Japan investment journey. with the insights that we have actually like received from Mr. Shoki from Tokyo Stock Exchange.
Yep, thank you, Billy. And with that, we have come to the end of the webinar. Thank you again, Shoki and Billy, for the sharing. And thank you, everybody, for your time tuning into this webinar tonight. Feel free to send in your questions via the survey that will be popping up after the session, and we will get back to you as soon as we can. We'll also be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. And that's all for today. Thank you, and have a good night, everyone.